Alright, welcome back, ladies and gentlemen. Today we will be reviewing Virgin Wick Theory 3.0 trades from Tuesday, 27th of January. Personally, I had one win, no losses for a total of plus 2R. I think it was overall like $700 or so across my two accounts. Yeah, we'll go over a bunch of setups, some A+ setups, some A- setups, and some setups you definitely should have avoided if you don't like losing. And also real quick, just an update on my 20 A+ trade challenge. If you've been following, I'd set out to do a challenge where I only take 20 A+ trades following my Virgin Wick Theory model. Started off pretty rough. I lost 5 out of my first 6 trades, but yeah, it's a good reminder to just stick with the process, trust your edge, let the numbers play out. And I think in the last like 10 trades or so, we've only lost 1. So yeah, looking pretty good so far, if you're curious on that update. But real quick, here's a quick summary of the model before we get into the trades. It's just a break, retest, continuation model, like many others. And the level we are breaking and retesting is Virgin Wicks. So Virgin Wick is any wick, like this one, that is untouched. If you draw a line to the right, it doesn't touch anything that is untouched, a Virgin Wick. So we wait, so this is on the 1 hour, we wait for a Chad candle to close through it. That wick level then becomes your bullish point of interest. And then in the next hour, you drop down to the 1 minute time frame, wait for price to trade below the POI into a higher time frame fair value gap, followed by our entry model, which is either a change in state of delivery or an iFVG, inverse fair value gap. Pretty straightforward. If it's confusing, don't worry, we'll go through a bunch of examples. All right, let's start with this win I had. So we're in London, 27th January, 3 a.m. candle closes bearishly through this Virgin Wick, creating your bearish point of interest here. So let's go to the 1 minute and have a look from 4 a.m. I'll also go to the 5 minute and just mark off this 5 minute bearish fair value gap. And here's our drawn liquidity down here, as you can see. All right, let's let this play out. So POI has been engaged. We are above the POI. There were a few, let me just turn this on. Yeah, so there was a SysD here, but we had not tapped into the FVG yet. We just missed it, so I did not like that. I wanted to see us actually engage with this 5 minute fair value gap before taking the trade. So we do eventually tap into the FVG and then followed by an iFVG. So this was my sign to enter. So I put my entry right there, stop just above here, targeting 2R. And this went to TP really quickly. And then you do also get a change in state of delivery a few candles after. But of course, I don't believe you would get entered in. Yeah, because it never revisits that zone. So that's why it's nice to have both iFVGs and CSDs as an entry model, because sometimes one will show itself and the other might not, and you can still catch the move. And another thing I want to touch on is why I personally like to cap my profits at 2R every trade. Because someone might see this trade and say, let me just hide the indicators. They might say, oh, look, the drawn liquidity is so far down here. Let me just get a bit greedy and maybe I can trail my stops all the way down. Or maybe I'll just go for a home run and try hit 6R and get a massive payout. If you want to do that, that's fine if that's part of your plan. But personally, I would hate to go for that and then go ahead and watch this hit 2R and then reverse and stop me out. and then you're probably gonna get really tilted and then do some revenge trading, oversize, and just blow your accounts, and then you're back to square zero all over again. So I would rather just stack base hits, 2R, 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 1.5R, and just slowly crawl my way to payouts rather than trying to go for these one-off big hits. So yeah, really nice trade. I know some others called it as well when I shared on Twitter. Yeah, beautiful, beautiful. There was one earlier. Whoa, okay. Just before this one, so 2 a.m. during London. Let's go there. Okay, so we have this bullish POI to work with, as you can see from our 1 hour chart. We had a strong close over this Virgin wick, creating a bullish POI. So let's see, POI gets engaged, and we actually take out our target very early on off the POI. And we revisit the POI into this 5-minute fair value gap, followed by an iFVG. So in theory, this looks like an iFVG trade. You've got a 5-minute fair value gap. We dipped into the POI. So you could enter there, put your stop just below the entry candle and targeting these highs. But as you may or may not know, I only like to take trades where the POI has not been used yet. And in this instance, I would consider the POI already used because it got engaged at the start of the hour and we had a nice run up to take out this drawn liquidity. So even though we revisit it and we get another entry model, I would not consider it. I would consider the POI finished, even though it does end up hitting your profit. That's fine. I'm happy to miss out on that. Process over profits, remember. On gold, there was also this 10 a.m. Candle I just wanted to go over because we do have this was New York yesterday, 9 a.m. Very strong bearish close through this, and this. I believe that's it. Yeah, so these are your bearish points of interest. But I'm not going to mark them off because we have our indicator. All right, so hour starts. We engage the first one, we engage the second one. And I'll also turn on my SysD indicator just so you can see if we get any. Okay, so we have a confirmed change in state of delivery here because here is the swing high defined as a 3-candle pattern where the middle candle has the highest wick compared to the candles next to it. So this has a lower wick than this has a lower wick than this, so that's a swing high. It gets taken out or swept, whatever you want to call it, by this candle. And so this is the leg that's liquidity. These two, this is the leg. So you want to look for the highest closing up candle, which is this one, and the low of that. So that's your SysD. Sorry, the open of it. The open of the highest closing up candle. Anyways, that's why you have indicators, if you're confused by that. Yeah, so we do get a SysD here after POIs have been engaged, but as you know, we only engage with we only take an entry if the higher time frame FVGs have been tapped. But as you can see, there are no red boxes here at all. So for me, this is a no trade zone. I would want to see us tap into these before taking a trade. So if you were to try and take this, no surprise, you will get stopped out immediately. There you go, just like that. So price continues to go higher. We get another SysD, another bearish SysD, because, let me mark this off. Okay, where's the last swing high? I'd say this swing high just got taken out by this leg. So we'll look for the highest up closing candle, meaning purple, highest purple candle, so this one, and the open of that. So there's your SISD. But again, price does not respect it because we didn't tap into any high time frame fair value gaps. We also get an iFVG here as well. So this could be a third entry if you're not careful. Something like that. But of course, it gets stopped out because we didn't tap any high time frame fair value gaps. I would say we still need to tap into these before getting an entry. We do eventually tap into it, but by then a new POI has already been created, so we are now looking for longs. So hopefully you avoided these 3 losses by sticking to that one simple rule of waiting for a higher time frame FVG. Because it is mandatory. It's not optional. It is, if it's not there, then there's no trade. Simple as that. All right, let's switch over to New York. We'll start at London. So 4 a.m. we do have a point of interest created, as you can see by the 1 hour chart. There's a strong bearish close through this virgin wick, creating this bearish POI, which is the red line you see on the screen. But we don't really have any higher time frame FVGs around it. We would have to go all the way up here to see a trade. And I don't believe price ever engages with them. Yeah. Kind of just chops around. It does tap the POI and then go down a bit. So let's see if there was a trade out of that. Nah, nothing there. Yeah. So another example of why it's super important to wait for these FVGs to be tapped. Otherwise, you're just going to chop around and not get anything. All right, let's go to New York yesterday on NQ. I didn't take any of these trades, by the way. I only took that one short on gold during London, and that was my one win for the day. But there was a potential setup here. So, okay. Let me move this. We are here at 9 a.m. and we have a bearish point of interest to work with because the 8 a.m. candle, as you can see here, closed through this virgin wick, just creating a POI. So, hour starts, we tap into this 5-minute gap. So POI has been engaged because we are above it. Tap into another 5-minute gap. And I believe there is a SISD here because I was watching this. Yeah. So right there is your change in state of delivery because this is a swing high that got taken out. And this is the leg that took liquidity. So let's look at the highest up closing candle, which is this one. And if it is consecutive, go to the last one. So that one. And that opening price is your change in state of delivery. So for me, this has everything we need for a setup. We've got our SISD, we've got a 5-minute gap, and we've got a bearish point of interest engaged. The only reason I did not take this, and why I don't love it, is because we would have to put our stop all the way up here, and the target is down here, and that is just 1.29R. As you know, and as I outlined in my Bible, which I always link below, I only take trades that are 1.5R minimum. But if you do not follow that rule, then hopefully you caught this one because this one does end up hitting TP. It does end up taking the draw on liquidity down here very nicely. It even goes, wow. I mean, you could have got something like that, but yeah. I didn't take it because 1.3R, not enough for me. But hopefully some of you guys caught it. And then there was a nice reversal of these gaps. Yeah, just another nice example of how powerful high time, when you have so many high time frame FVGs stacked like this, like a 1 hour, 4 hour, 15-minute, 5-minute, plus an iFVG, that is such a strong reversal. Like, look at this. But of course, I'm just babbling right now. This is not part of my model because this is not a bullish POI. But just showing the strength of FVGs. And then at 10 a.m., I believe there was another setup. So we have these two bullish points of interest created by our CCT indicator. showing that this hourly candle closed through these virgin wicks. And I believe there was an inversion right here. And I know some people took this one, but for me, of course, there is no clear drawn liquidity. And I need to see something in the vicinity for me to aim for. But of course, it ends up running super high, I believe. Yeah. But yeah, that was it for New York on NQ. I was hoping I could cover Asia today as well, tonight. 27th of January is Asia session. But since New York, we've just been grinding so much higher. We've been like impulsing higher. Not even getting a chance to touch these POIs. This is NQ. And let's have a look at gold. Yeah, like just grinding higher, not even engaging the POIs. So today seems like a trending day. I don't think we're going to see much this Asia session. So I think I'm just going to call it for Asia. And then maybe I'll look again during London and New York. Yeah, I think I'll end the video there. Hope you like that one. See you next time.